Hello, everyone, and welcome to the webinar, Clearing the Path for Branch Transformation, 3 Management Tactics to Succeed, sponsored by INETCO and hosted by ATM Marketplace. I'm Suzanne Flucky, editor of ATM Marketplace. Let me start by encouraging you to stay with us for the entire hour and to take advantage of the live Q&A session following the presentation. I also want to invite you to submit any questions you have during the webinar by typing them into the chat window at the bottom of your screen. Our presenters will be getting to your questions at the end of the presentation. After the webinar, we'll be posting a replay of the event on atmmarketplace.com. You'll receive an email notification and a link which we hope you'll share with others who couldn't make today's event. Our presentation today will show you how to clear a path to successful branch transformation by identifying and implementing the tools needed for smooth and seamless operation of a multi-touch digital branch network. Our presenters will outline 3 management tactics that can help you to increase the reliability of self-service device performance, gain real-time visibility into the use of all things digital, and optimize your cash position. Now let me introduce our presenters. Stacy Gorkoff is Vice President of Marketing at INETCO Systems Limited. Stacy has spent more than 15 years working with leading-edge technology companies, and she loves helping customers become data smart, uncover new revenue streams, and deliver amazing customer experiences. Lisa Kellermeyer is Marketing Manager for Global Systems Management at NCR Financial Services, where she focuses on helping customers achieve business objectives related to comprehensive device and incident management. Martin Shires is Marketing Manager for Global Branch Transformation at NCR Financial Services. He advises FIs on new technologies for network redistribution, customer experience, and sales cycle management. He also spent more than 25 years in retail branch banking. And if I'm not mistaken, Martin, you'll be kicking us off today, correct?
That's correct, yep.
Well, take it away then.
Excellent. Okay. Hopefully the audience can see the first slide coming up here. I just want to kind of talk from a banker's background. I think obviously my kind of bio quickly said I was in retail banking before joining NCR, and I've got to admit to this that I hope to be able to translate the technological aspect into a practical kind of banking leader's viewpoint here as well. When we look at all of the customers that we speak to worldwide, and especially so in North America as well, when we talk about these kind of 3 initiatives here, you could boil down to around 10 or 12 versions of them, but they absolutely come into efficiency, consumer experience, and revenue growth. None of these can happen without all of the rest being in concert. And I would put forward just something that I think we need to talk about here when we say consumer experience, so we're all on the same wavelength. Consumer experience is nothing fancy, nothing magical, nothing mythical. It's just a basic ability to get the right thing done so that your customer gets the right product, the right service, the right transaction, and goes away saying, my bank got it right every time I did it. If you want to dress up any other way, that's great because that'll differentiate any more, but I think we really need to bear that in mind when we talk about this here. In terms of lowering cost of serve, I'm going to go from right to left here. When we've talked about this over the past few years as bankers and technologists, we've gone through kind of right-sizing branches. We've gone through redistribution of networks so that we have smaller branches, larger branches put into the right kind of footfall area. But quite frankly, now we're getting to the point where really it's just a case of making sure that the staff that your consumers so readily crave, according to all the analysis we're seeing happening just now, get to reach their customer, whether it be in front of them between 9 till 5, whether it be by video and remote control at any other time of the day, whether it be on their tablet or anything, using some other kind of semblance of that type of communication. They've got to be able to do that efficiently and cheaply. And your consumers are demanding that it does happen because they say, hey, everybody else can do this. As bankers, I expect you to do exactly the same as Amazon, for example. In terms of optimizing the channel service mix still, we've just kind of covered that there, but it's saying that look, you can't just go and be siloed. You can't over-migrate me to digital, which is self-service, without giving me the choice, and you need to do the investment to have the infrastructure to do that, and allowing me to access a branch experience at the same time, should I want it, whether that be for simple product purchases, complex transactions, or again, advisory services. But finally, that delivery of an omnichannel experience where, as the phrasing said, we merge physical and digital consumer experience, again, it's saying, well, look, whatever gets said on one channel, could be video, has to then show up when I go and do a transaction at the ATM and then wander into a branch 5 minutes later and speak to the good old-fashioned call center 2 minutes after that as well. We see a heck of a lot of your peer group who have got mass numbers of systems there, which are now being kind of closed down and put into one hub as that kind of modernization goes on. But the problem is the creation of that one hub needs management and observation to make sure that all those transactions and data transfers go through correctly. In terms of why we should integrate your branch and omnichannel proposition, I've covered a fair bit of it here, but it's absolutely down to achieving greater sales growth. If we look at probably around about the top 20% of North American FIs over the past few years who have posted efficiency ratios and revenue ratios, we only see that in a small percentage being the top guns who manage to control cost and increase revenues simultaneously. And the secret to doing it is they're investing in omni-channel capability, a lot of new technology to do with getting that branch experience to their customers where they want it, and that is getting them a consumer experience lift in customer satisfaction metrics or NPS score, however you want to measure it. And that is the secret sauce that's going on there, because we can't just say, let's go and sell without getting it right the way our customers want to. In terms of the near-term business drivers, and this has obviously come from Selene here, if you look at it, it says maximizing the sales and service effectiveness of frontline staff. Those frontline staff, again, I would say, are not just bricks and mortar. We need to consider the fact that technology allows them to be in the customer's living room, physically perhaps, with an application on tablet, in the branch, controlling the ATM using kind of remote from their tablet there as well. Really, any way of reaching you that your consumers, young and old, by the way, have learned to be served over the past few years. That is where technology is taking the capability of the banker. And the problem is, the more we heighten the expectations and advertise now for differentiation as brands, the more we've got to be able to say, look, a banker cannot go out and do business unless they've got all those systems locked down and continually manage to make sure they're going to allow them to do their jobs in this kind of brave new world. Suzanne, I think you were going to take us to a quick poll question, which I think would give us some good context on our audience and give us some chat points later. Is that right?
Okay, great. Thanks, Martin. So our first poll question, we'll have two today, and our first one is, what are the driving factors behind your branch transformation? You can choose one, and only one, unfortunately, but they are sales growth, customer wallet share, declining traffic, cost pressures, competitive initiatives, executive mandate, customer feedback, or other. And if your answer is other, we'd really like for you to type that into the chat window, so we'll get some kind of information and understanding of what your issues are. Okay, and while we wait for our poll answers to roll in, I'm going to go through a couple housekeeping items. The first is, if you happen to join us late today, I want to let you know that today's webinar, including the slide deck, will be available for replay at atmmarketplace.com. When it posts, we'll send you an email notification and link, and we welcome you to share this with others who could not attend today's event. And another item, as I mentioned, I think earlier, you can put your question in the chat box at the bottom left of your screen. If you have a question for any of our presenters, we'll be getting to all of those that we can at the end of the hour. And so we certainly hope that if there's something that you want to know about this particular topic, that you will feel free to ask. And let's see, still have a couple of responses coming into our poll. Okay, it looks like we've got just about everybody in now. So, as soon as I say that, we'll get three more. So, hang on, Martin, I'll get it done here. Okay, and I'm going to close in 5, 4, 3, 2, 1. Okay. And, there's our answer. It looks like sales growth, customer wallet share by a long shot.
Yeah, and I might comment on that, but I'll say feel free as well to my kind of colleagues who are joining in the webinar to also say the same thing. there's not an element of I told you so there, I think, but it reflects the fact that our analysts, for example, are out there talking and see a massive shift that goes away from the table stakes 2 to 3 years ago that made that kind of physical right sizing and redistribution of physical assets we talked about before, and saying, you know what, we now understand the fact that it has been the same for the past 10, 20 years, particularly as proliferated by call center in the early days, that yes, customers just want to get to speak to their banker and have a choice to do it. I think we've all learned, to be honest, over the past 2 or 3 years, that you can't put a business case for inserting the kind of technology to allow you to go genuinely omnichannel unless you build that business case around some kind of sales growth and wallet share. But as we said before, it's all tied up. So it's quite pleasing to see that the table stakes are there in that poll, but overwhelmingly I think our audience is feeling the pressure to go out and say, yes, we want our customers to be buying more from us so that we can really penetrate into their lives and make a difference.
Hi, Martin. It's Stacey. I also wanted to point out that somebody made a very valid comment about the importance of changing customer usage so that they're now, when they're interacting, they're definitely using more than the one channel. This is definitely a valid point as well.
Yeah, absolutely fair. And of course, we can't predict which one we'll use, Stacey, can we? So we're going to be on point for every single channel to be 100%. Yeah.
Exactly.
Okay. Guys, I think that was very useful to see that as well. We covered probably the subject matter on this next slide, but I think we just want to get it absolutely right in our heads here that everybody we're speaking to, certainly worldwide, whether it be North America, whether it be Europe, whether it be Middle East, Africa, Southeast Asia, these guys are saying, you know what, it is not just millennials that are designing the way that we create an omnichannel experience. Certainly Capgemini's poll from last year came out with every single major territory being pretty much the same. They said whether you are Gen X, which is my age, by the way, a complex customer with children and all sorts, right away to Gen Y, which is the supposed up-and-coming, sexy, cool customer with a whole lot of products yet to flood into you. These guys both shop the same, they interact the same, and conclude their business, whether it be for simple or for complex products, in the same way. And all of those channels, as Stacey was saying, will be used at some point, but the conclusion usually ends up coming in a face-to-face or virtually face-to-face manner here as well. I think it just realizes the fact that you can't sit in a silent world and over-migrate anybody at any point if you truly are to be the bank of choice for your customer. Stacey, I think you'd like to take us through investments and next, isn't it, the kind of profile we're seeing across most of the peer group here.
Thanks, Martin. And where I would like to start is just backing up what you have shared on how consumers will utilize the bank branches in the future. Let's quickly consider some data that was published by Bank Director. This was shared in a recent blog posted by the Financial Brand. And the question was, what will investment in the branch proposition look like in 2016? And I think one of the key things that stood out, and this won't be surprising, is just how technology investment is being viewed as such an important part of branch strategy. The other more interesting thing is this focus on building out a frontline sales team. So an interactive team that can generate more consumer interactions within the branch and really expand customer wallet shares. This is an approach that is very different than that traditional behind-the-counter branch teller role. And then if we move on and we really think about what digital transformation is all about, I think it's pretty safe to say that these trends towards greater investments into technology, building out this more interactive frontline sales staff, these are going to play major roles in banks that are going digital. So really at the heart of digital transformation, there's this desire. It's this desire to improve revenues, of course, but doing that through customer convenience and better product alignment. And really, and I think you've touched on this too, Martin, giving branches the opportunity to reestablish their role as that advisory center. I think digital transformation is a lot about lowering the cost to serve, and this is by migrating those less complicated services and transactions to ATMs the online channel, other digital channels, the mobile channel. But digital transformation is not about getting rid of the human component. On the contrary, these frontline staff will probably play a larger, more proactive, probably a more knowledgeable role than ever. And with more data at their fingertips, you're going to find that your branch staff can speak more intelligently with customers, perhaps provide deeper servicing and product advice, and really they can be on any device at any location at any time. And this is actually bringing me into the next point of digital transformation initiatives. So these seem to be spread among a couple of key areas in the branch, and that includes self-service channels. So in addition to those common interactions such as withdrawals and deposits, we can see investments being made to offer more cross-channel and value-added services. We're seeing a lot more interactive components. And again, Martin, you touched on this when we first started there, interactive components such as video tellers. If we stop and think about this true impact of like a full-blown video interview that's maybe available at the ATM, or maybe it's being offered through a customer's mobile or a tablet of some sort, all of a sudden we're into 24-hour-a-day availability. You've got remote experts that are controlling all these various native applications. It could be signature capture for loans and mortgages. It could be the imaging of documents. And truly this is adding a level of what I'll call instant gratification. So the consumer sales processes are shortened and people are happier. This is all necessary to really support this growing influx of customers that may want to do digital interactions. It's all about making them happy and more willing to increase their wallet share with you. Now, another area where we're seeing a lot of digital transformation initiatives is this idea of boosting the sales component and the interactivity of branch teller staff. So the most obvious form, of course, is the tablets and other assisted self-service devices. But if we go a level deeper, there's some technology investment that's rooted into data analysis and robust consumer experience analytics. So these are the platforms that can offer the frontline support teams that full on-demand profile of the customer. It's essentially everything is working in real time, where we're providing these up-to-date details on how they interact across all of the banking channels. And again, this is more about successfully knowing how to get that right service to the right customer at the right time. Now, the third area of digital transformation is channel management, and we're going to get into this in a lot more detail in these next upcoming slides. But really, with more digital convenience and more frontline sales empowerment, there comes this whole new level of operational complexity, I'll call it. And if we don't manage that, all this work that's being done to improve branch efficiencies, this is going to be offloaded by support costs that are spiraling out of control, self-service delivery headaches, and really unsatisfied customers. So, and again, we're going to get into this, but channel management solutions should definitely be considered, a part of the foundation of any of your digital transformation or branch transformation initiatives. And they're very, very key to guaranteeing that consistent brand experience is delivered no matter what service or touch point is being used by the customer and where the transaction is being routed. And with that, I think we have another poll question.
Great. Thank you, Stacy. And yes, we do have a poll question here. It is, how will you be adjusting your branch strategy in the upcoming year? Will you be reducing size in branches, reducing teller or first-line support, investing in assisted service tech, perhaps investing in data management tech, expanding channel management tech, or again, other? And if it's other, we would be grateful if you would put that in the chat window so we can record it. And let's see, we're going to wait for these to come in. They're coming in pretty quickly right now. But while we wait for responses, just a reminder, you can ask questions during the webinar by typing it into the chat window. And we hope you'll ask any question that applies to today's session. We'll do our best to get to your question during Q&A, but if we should run out of time, be assured that one of our presenters will get back to you with an answer to your question. Also, if you joined us late, I want to say again that today's webinar, including the slide deck, will be available for replay at atmmarketplace.com. And when it posts, we'll send you an email notification and link, which we welcome you to share with others who could not attend today's event. See where we are in full responses. Looks like they've just about put coming in.
It's Monday. I think just while I'm going to take the opportunity while the poll responses are coming in, if that's okay, just to answer a question.
Sure.
We've got came up to Mark Gossey actually, and Mark, I think if we know each other well enough, I can answer that for you there. Part of what we're talking about in this webinar is we go to war, if that's the right way to say it, as FIs to try and get our customers to connect with us, not just face-to-face, but by video, by other kind of virtual means, etc. And even for the fact that will they trust us as we wander around the branch looking cool with a tablet in our satchel controlling the ATM, for example, rather than a teller. And I have to admit, the only way to get these consumers who are going to use this and adopt it speedily to trust us, particularly when it comes to high-value transactions, which could be deemed to be either monetary or it could be, for example, just being interviewed about a complex risk-based investment, is always going to be on the fact that we've got to coach them through it, concierge them through it. I think it's everybody on this call will have experienced the fact that adopting even the most basic new technology, things like telecash recyclers in the past, which are now about 10, 15 years in the bag, just got right down to the fact that we had to walk customers through it and make them trust us time after time. But inevitably, humans go for it. 2, 3, 4 months in, they will migrate, having seen the fear go away and having seen the transactions done. Likes of video tellers have now proliferated across the community banking segment in the US. It's probably around about 275 customers, if not much more, who are now using that. And we're now seeing many of those credit unions pumping out their own advertisements on the web to say to their customers, we're using this, come and try it out and see how easy and successful and safe and secure it is. But to that point, while those consumers are happy because they've had a great experience by the way that it works, yeah, I agree. We've got to make sure that the channel management component measures and continually tracks, and minute by minute repairs any issue in there so that the banker doesn't lose trust in that new technology, particularly when it does come to something like a video chat with a high-value, complex transaction or sale in there as well. Okay, Suzanne, I'll be quiet now and just let us talk about the responses here.
Great, Martin. Well, we actually got 11 more responses while we waited for your answer, so it's definitely worthwhile. And I'm going to close the poll now. Countdown 5, 4, 3, 2, 1. And let's see if I can get this up here. Okay, close poll. There we go. So this is a little more evenly kind of distributed across the spectrum here. And I will turn it back over to you guys.
Yeah, I think it's Stacy, Martin. I was just going to say that whole idea of investing in assisted self-service technologies, I think it aligns quite nicely to the sales empowerment trends that we were seeing as well, whereby, improving the interaction, improving the ability of the frontline salespeople to be on the ball and to know everything that they possibly need to know about the customers to be successful and make that customer feel special and aware of what the bank, the feeling that the bank knows what they want. Better product alignment.
Yeah, I think so. I mean, there's a big number in there for investing in assisted service technology. And let's kind of get right down to that. That can be anything whereby the customer primarily goes self-service, but there's a touch option that says, I want to speak to them either physically or virtually in some way. The whole point of it being that self-service still is the bulk of the interaction the customer wants, but assisted service is there. Great, because it means that you don't have to have people ready unless the customer wants to, rather than having them waiting there. But let's still look at what's sitting there. So that reduction in branch size, whether it be number in the estate or the actual physical size in the branch, should naturally come. And we still see a lot of our customers using this new technology Video just happens to be probably the most well-proliferated one we've seen for assisted service, so they can get the staff who are sitting in branches physically out and expand the time and location. And by default, it means that the bricks and mortar branch then becomes a destination for sales and advisory. But look at the expand the channel management tech there as well. You know, that's pretty telling, to be honest, Stacey. That shows a whole load of our customers are saying, you know what, we still want to measure and make sure that everything's working before we go out there with any new technology. A couple of questions I thought I'd just answer, but then let's kind of crack on pace as well. Freddie Conan, for example, says that how do you know if your customer is happy and measure years of experience if you've got so many different touch points? Every single one of these technologies still, whether it be an omnichannel appointment schedule and a workflow system, whether it be assisted service, whether it be self-service, and so on in there, they should all have a component in them. Now, every bit of technology I've seen allows the customer to select either a simple or a more specific set of questions to answer to say whether they find the experience useful or not. It goes right back to standard banker 101. And in my day, and I know some of the listeners will have done the same as I have, you sit in a branch at 5 p.m. at night, you bring in 20 customers who have visited that day or called that day, and you give them a phone call. And you say what was good and bad, not just a case of did we say hello nicely to you or give you your money. It's was the person you spoke to knowledgeable? Did they have a system that allowed them, despite their capability, to go fast and respond to what you needed? Those kind of questions can be built into any of these technologies so the customer can anonymously or give you their identity and come back and let you know that. It's simple 101. I think I'll finish off by saying Net Promoter Score is useful, but customer satisfaction directly is king. Sorry, Stacey, on you go.
Well, I was just going to add to that as well, that when I think about how do you know your customers are happy? You rub a magic lamp and you hope that the genie can tell you everything. But the idea is that thinking and kind of going into the omni-channel perspective, omni-channel monitoring, omni-channel analytics, being aware that your customer is getting that same consistent brand experience across all your channels is definitely important. You know, it comes down to some analytics as well. I mean, know thy customer, right? I think that's probably one of the banking rules out there too. And I think that the more data that you can capture in real time to really know and understand how your customer is interacting with you, the happier, the more chance you have to make that customer experience, you know, a complete success.
Yep, absolutely.
Okay. So at this point, I think what we're going to do, we can move on, and Lisa is going to take the next couple of slides.
Thanks, Stacey. So we're going to move into a bit more of a tactical perspective. And what was just interesting that as everyone is thinking about adjusting their branch strategy to a more of an assisted service technology footprint, I'd like you to think about, as you move this towards that device and digitally dependent environment, it's important to ask, how are you going to manage that environment? And how are you going to know it's performing in the way that achieves the goals, such as sales growth, per the other poll, that were set for this environment? So we all know that the new branch model relies heavily on devices and technology and digital transactions. And any hiccup in these channels can cause disruption to that great consumer service and satisfaction that you're trying to provide. As a result, this could mean a loss of customer loyalty, loss of revenue, possible failure of your new branch model. So over the next few slides, I'm going to discuss three main areas that we feel you should focus on when you're building out your branch transformation plan. So, top three priorities for branch management. The first one is going to be device management. And that's making sure that all of your devices are performing your customer transactions without any disruption, and also making you immediately aware when they're not. The second area is transaction management, which is providing visibility into all of your digital transactions that are taking place at the branch,
and then also being able to pinpoint if there are any interruptions. And lastly is cash management. So if that's ensuring that you're managing your cash efficiently so that it's optimized and it's always available for those end users. So let's take a look around your new branch model. So whether you have solid plans in place or you're just imagining at this point. And typically you're going to see that the teller windows are being replaced with interactive teller machines. You'll see additional self-service kiosks. There'll be many of the universal banker representatives holding wireless devices and walking around and helping folks. And you'll see offices that are only adorned with a computer and a computer monitor. So now think about what would happen when all of those devices start to go down, or if one goes down or two go down. That's not a good picture. So let's talk about what kind of management solution you'll want to have in place to support that environment. You'll need a solution that not just monitors the device health, but is going to be able to facilitate creating your service incident, remote diagnosis, and remediation of those issues, or a solution that can manage the issue from ticket creation to technician arrival, all while you and or the branch manager can receive real-time status updates via a mobile device. You'll want to be able to set custom KPIs for tracking and managing the performance of the devices and the transactions to understand not just your future needs, but have the ability to view these KPIs in real time on a mobile device so you can get ahead of any unforeseen spikes in foot traffic. And this is extremely important to that universal banker role, that sales-savvy personal banker who's now tasked with generating staggering revenue targets per year. So imagine what happens to this associate's goals if the technology that's available is inconsistent. So it could mean big revenue losses for the bank. Lastly, you'll want a solution that can provide robust reporting and analytics. So coupling business intelligence with future banking trends allows you to make better, more informed decisions on future consumer behavior and maybe additional services that you want to provide. And then to the point of the question about a happy customer, we create customer trust by having successful transactions, reliable, always available technology that's ready to serve the customer. And that ensures that great experience when using that technology, so then the customer trusts that the technology is going to work and is most likely will come back and make additional transactions. Stacey, I'm going to turn it over to you to talk about transaction management.
Great. Thank you, Lisa. So when we actually refer to these transaction management solutions, what we're referring to is the ability to collect live data off the wire and use this data to manage all things digital. This is the data that can provide a detailed end-to-end operational view into how your applications and networks are performing, but it also provides this wealth of information on what the customer is truly experiencing and how all these assisted service devices and applications are working on the front end. So if we stop and we really think about today's customer, they do use multiple channels and touch points to be it research products, access and manage their accounts, perhaps resolve banking issues, or receive notifications. And an omnichannel view into their activities becomes pretty powerful and key to making these good business decisions. Some of you may be thinking that you already have views into payment transactions that make it to your switch. But digital transformation, it means that it's time to maybe rethink that view and expand it. Think about including the performance of more complex services such as mortgage applications, loan applications, instant teller and video kiosk services, new data submissions. It could be any of your mobile or your online applications as well. Here at INETCO, we like to say every transaction tells a story. And really, when we think about that, we think about it from an operational and a business perspective. You know, as we mentioned, the operations side is, okay, well, how are my applications and networks performing? Are my third-party service providers responding the way that we expect them to? Is there some sort of a bottleneck or communications failure occurring, and where exactly is that issue residing? When we think about using this wired data for a business perspective, it's all about analyzing the customer experience and looking at more questions related to the actual business, such as what is the value of each transaction from both the revenue and customer service perspective. Which device are your customers choosing to interact with you, and how much is it costing you to actually run that device? And then what services are they preferring to use within each channel? You can also use this data to start doing predictive things, such as understanding queue lines at an ATM, or perhaps understanding and catering customer preferences when it comes to choosing various services and self-service interaction habits. The last point that I'd like to make about transaction management solutions today is, although they often will come with a variety of their own data interrogation, their analytics, their real-time alerting tools, this data is also extremely valuable if you think about forwarding data to various device management or cash management platforms that are more in alignment with what you're currently using. And with that, I'm actually going to pass you back to Lisa, who can take us through this third management tactic, the cash management component.
Okay, thanks, Stacey. So even in the world of digital banking, cash is still the most prominent form of payment, and that comes with its own set of challenges. There's keeping up with regulatory mandates, the fluctuation of the cost of cash, and consumer usage, all of which are constantly moving and changing. And one cash-out experience is already one too many, impacting the consumer experience, loyalty, and the bank's reputation. So the only way to stay on top of these challenges is to implement 4 fundamental techniques for managing cash: forecasting, cost optimization, process automation, and increased visibility. So you want to put a solution in place that allows you to take full advantage of highest return on investment for your cash and cash supply distribution channel by anticipating your cash needs, automating your transport scheduling, creating perfect balance of your supply, demand, and inventory, and then obviously the lowest cost of operations. So real-time awareness of cash assures an exceptional network performance and ensures that when things go wrong, swift action can be taken. So from there, I'm going to hand it back to Martin to give us a summary.
Thanks very much. It always helps if I kind of come off mute business. Okay. I just want to summarize where we started, quite frankly. If we look at what we're doing across those kind of 3 key elements of executive priorities and decisions and kind of going across more and more complicated stakeholder boards every day that we interact with our customers around the world in all of these territories, I want to bring something in which one of the questions came up with early on that said that should you adopt, whether it be through monitoring and achieving kind of predictive maintenance of making sure that the technology and the endpoint devices we rely on so much, we really need to make sure that if you're going to go in with a strategy that says, I want to have massive expansion in terms of my consumer reach for my staff, I want to have great seamless omnichannel ability for them to self-serve transactionally or for purchase of a product on one channel, and all that data and all those applications and all of those outcomes that flow through to assisted service or face-to-face and all the other channels that we're put together. You cannot avoid having some kind of predictive, artificially intelligent system that backs you up to say that it will measure what all of those transactions are doing, whether it's one endpoint with an external provider that's got a problem and you can then report it back to your consumers, or whether it's just straightforward as monitoring the cash that you've got that says, yes, you may have great interaction with a video teller, but they run out of money there. that kind of basic banking, just getting it right, is the consumer experience. I just want to say that the poll questions kind of rang true with what we're seeing here. And therefore, it's imperative, I guess, that us as technology providers make sure we respond equally to all of the stages of transformation everybody is going through, whether it be right-sizing and gently migrating to self-service, starting to take on assisted service because they want to get those efficiencies but keep that personal touch, right the way up to those FIs who have got a very visionary view of how to make omnichannel work, which blends self-service with their staff coming to you in your living room on a tablet via video with remote control of the native applications. Everything is going to be put together. Everything is going to be architected and phased in such a much well-measured way now that really you've got to engage us in consultancy first, I would say, as technologists, before we then get into laying the carpet for you to have a sustainable consumer experience to keep all that loyalty and revenue and wallet penetration going for the future. Okay, that's me.
All right. Any final comments from any of the other presenters on that particular slide? Okay. We're going to go now to the Q&A part of our presentation, and we've had several questions answered during the presentation, but we have more, so I will start going through those now. David Hartwright asks, do you find an overall blanket approach for branch transformation works, or should it be tailored to regions?
Martin, do you want to start with that one?
Sorry, would you mind just saying what the question was again? I didn't quite hear it.
Sure. Let's see, where was it? Do you find that an overall blanket approach for branch transformation works well, or should it be tailored per region?
That's why David's put a few questions to us, and I didn't think I quite typed fast enough to answer that one too. Modern wisdom would say, yes, you go, and whether it be region to region, state to state, for example, you'd say, hey, the demographics play a part in this. Is it affluence? Is it the kind of maturity level of the bank, etc.? But what I would say is that whether you go to Southeast Asia, whether you go from state to state in North America, whether in the middle of Europe, where you are effectively just crossing states by going across any of the 40 countries there, as examples, the use case of what consumers have already got used to in terms of self-service tends to determine the approach at that point. I'll give you a quick example. North America very much went towards self-service enormously with check imaging, and then is returned by some of the largest top 20 banks in North America saying, we've gone too far with a siloed approach to migration. We thought convenience would rule, and we thought millennials only wanted that kind of convenience, but we're starting to realize that actually, as they start to grow up and need a product, that we need to have good old-fashioned face-to-face still there. We've seen in Europe, for example, because it's a very, very sales culture over there, always has been. Consumers know it, and certainly bankers know it, but they've just gone straight to enormous self-service, almost 90% migration, but they've been quite happily saying, can we have technology that allows us to go straight to anytime, anywhere, face-to-face advisory and simple product sales. I know it all sounds a bit sales, but genuinely that's what's getting you there in terms of experience. Allows you to show your customer that's what you can do. Southeast Asia, these guys have been dying to have video connection with customers in their homes for years. And quite frankly, in India, they've been doing it for years already as well. And think about all of the kind of demographics involved there, and all of the kind of maturity of the jobs market, and so on and so forth. We could go on forever. I guess what I'm saying is there's certain home truths that banking says that if you introduce a technology and it's got a business case that works because you know your consumers have told you that they need you to expand the way you do business, then really that kind of branch transformation blanket you're talking about can be pretty much applied in nice phase steps all the way. Do physical migration, then expand it to omnichannel, and make sure your self-service keeps up all on the way and is integrated with both.
Yeah, and just to add to that, I mean, every country, every state, I think every every region has such a different buying behavior and, consumer habit. I think about Africa, for instance, where there's more mobile cell phones than there are toothbrushes. It's really, really important to get down to the logistics of what's going to best serve your customer for that region, and understanding and taking time to gather the data that you need to make that decision is extremely important.
Okay. Any other contributions? All right. We'll move on to the next question then. This is an interesting one. How do banks develop a plan for protecting the 24-hour retail banking environment and new technologies and self-service tools that are to be made available after bank hours?
I can kick us off with an answer to that for sure, and Lisa, you may want to hop in. I think the ability to guarantee that all of your applications and your self-service devices are performing the way that you need them to after hours, and that your remote agents have accessibility and can work with the applications in the way they expect them to. This is at the heart of what we've been talking about with just this channel management capabilities and being ready to support that type of environment, be it on the self-service side, be it on the actual application side, be it on the cash management side. These are all solutions that definitely fit into that. But I'm wondering if I've got my INETCO sunglasses on and I'm maybe ignoring a part of the question. And Martin, feel free to join in if you see the question is a little bit different.
So I think, Stacey, you're absolutely right that as far as looking at these 24-hour branch environments, it's having the right solution to detect when something is down, when something's not working, which is, I guess, another proof point when I spoke about earlier that having the ability to obviously not just have your help desk managing your devices with a robust application, but the ability to also have the freedom to view these incidents and statuses on a mobile device, so that at any time, no matter where you are, anytime, anywhere, you can see what's going on with your devices and be able to respond immediately, whether it's opening up a ticket or tracking a technician, so that you're aware at all times how those devices are functioning, and again, if they're not, when they're going to be fixed and back up and ready for service. Martin, did you have something to add?
No, I think you've covered it well there.
Okay, that being the case, we will move on to another question from Kathleen, and this is the several million-dollar question, I think we can call it. What solution would you first put in place and invest in to begin the process?
All of them.
You're right. You could say that. You could say every single one. I'm going to come out and say that as a banker, I firmly believe that a teller should be making $105,000 in revenue every year by the direct activity management they have been under for years. We can certainly, when I was looking at all banking job adverts 5-6 years ago, they were exactly the same. Please get your teller in here and hand over the money and service the customer. But by the way, you'll be selling things to make the customer happier. I believe that a universal banker, personal banker, concierge, whatever we want to call them in a kind of fancy world nowadays, they still should be rocking up with about $400,000 in revenue every year if they're managed appropriately and given the right tools. And likewise, a sales expert will be within about $10,000 of that as well, all kind of doing their product sales and selling services, whether it be transactional or even just kind of recurring basic products that customers are used in perpetuity. I would say that if you're going to go along the lines of redistributing your branches and making sure those bricks and mortar go to a smaller size, so the profitability is not so critical and you can concentrate on the consumer experience as a whole, holistically across all channels, you've got to go down video teller. Happens to be one of our best proliferated products is NCR, But quite frankly, if that's a way that you can use the ATM channel the way that everybody has been used to using it for years for migrated transactions, and where consumers have already got an enormous appetite for doing more transactions on there, and then you embed humans in there for the complex transactions to maintain that kind of face-to-face glue, and then really you're giving your staff the capability to go and execute that sales responsibility they have built across 24/7 anywhere. And that feeds right through to the sales experts and the universal bankers who no longer have to rely on footfall, but can just respond to customer queries from anywhere at any time. So I would go video tele, quite frankly. Great blend of consumer experience, efficiency, but still making sure that you're genuinely everywhere in the consumer experience and sales loop.
Yeah, and just to add to that as well, I think you've got to ask yourself, what is the key issue you want to resolve, and work with partners. You know, NCR has a great relationship out there with a lot of people, and have been known to be very unbiased in their opinions, and really help you be aware of what it is that you need to resolve certain issues. I think if you go out there and you start looking at technology, it's a bit of an overwhelming game. But being a little bit more aware of what's going to align with certain initiatives that your bank branch has ranked as, you know, top priority, and then working backwards from that, and again, partnering with great vendors, I think that's very, very important, and something it's worth the process.
That's a really good point, Stacey. I think that there are so many options out there now. It does get a little overwhelming at times to try to pick and choose among them, and then know what goes with what. And which kind of brings us to another question, and I want to get this one in. Looks like this will be our last. Tony wants to know, how are leading FIs managing to deliver a true omni-channel data analytics single view of the customer, particularly in light of the impact of old mainframe legacy systems?
Well, I can start with that. I mean, that's, Tony, you bring up a very good point. And, you know, when you look at today's banking systems, you are dealing with a lot of legacy systems. You're dealing with the new front-end applications. You're dealing with way more APIs, so a lot of third-party connections as well. And the idea is, how do you tie all this together to actually, you know, number one, centralize your data, so making sure that you've got a centralized transaction data hub is becoming more important. Number two, overcoming any of the protocol issues, so making sure that all these protocols are actually talking to each other, and your system is going to work and really produce that end-to-end customer experience, whereby none of their transactions are actually being affected by, say, a back-end system or, you know, an API or a third-party system that's not responding. I mean, taking wire off the data does give you the benefit of being able to take this look at a correlated view of every single transaction. So, you know, not tunneling your focus into, okay, well, how is a certain application performing? And there's, you know, I'm not saying that there's no room for APM tools or anything like that, but I think it's really, really important that you think about this in terms of, okay, we've got network monitoring tools, we've got application performance management tools, we've got self-service device management tools. How do you actually look and tie all of these together to be aware that everything is performing the way it should be? And that's where looking at ways such as transaction management, where you can pull data off the wire and see that end-to-end view, that might help you for sure. You know, it also gives you the benefit of going beyond one channel. So getting that multi-channel view, understanding it doesn't matter if a transaction starts with an ATM and ends with the mobile, or it starts with your branch and ends at the mobile. You can all of a sudden start tracking those transactions and being aware of how all these various application components that are, you know, on that path and making up that end-to-end path are actually working together.
Great. Thank you, Stacey. Anybody else have a contribution to make to that one?
I think so, yeah. I'm looking at the single view of the customer, kind of picking up on the data more than the analytics. I'm going to go to a growing knowledge and proliferation of appointment scheduling solutions that we've seen. It's just a good example of how to talk about it here. There are lots of those out in the ether just now which handle the consumer front end. But when those start to grow and cover workflow, and really start to kind of dig into the back end and then get add-ons as we're seeing develop to go with them, whereby they can analyze the consumer journey and come back and tell you which bits are performing as they should. When those systems are created so they can be used as a middleware consolidator through a good open API structure, that is when you start to get a great view, data analytics, not just of transactions, which are massively important, I agree, but also the success of all the interactions and of all the kind of databases that we use for marketing and for sales, etc., to then come back and truly tell us what's happened with the customer, how well it happened, and what we need to do next with them as well. Certainly, we keep on the lookout for them because there are a lot of technologies in the market just now. There are those who have gone from being developed from consumer front end, but have started to go into the workflow space. That's where you're truly starting to see some great analytics and good control of the consumer experience to give you what you need at the front end to know that your operation is running well.
Great answer. Thank you, Martin. Anybody else? Lisa?
No, I think that both Stacy and Martin covered it.
Okay. Well, and that brings us just about to the top of the hour. So that'll do it for this conversation. I do want to thank Martin, Lisa, and Stacy for a very informative presentation. And I want to invite our audience members to stay connected to this topic by visiting us at atmmarketplace.com. If you ask a question we didn't get to, although I think we got to almost all today, or if you think of a question later that you didn't ask today, you can send an email to any one of the addresses you see there on your screen, and they'll make sure to get answered for you. So thanks again to our sponsors at INETCO and to our speakers, Stacy Gorka, Lisa Kellemeyer, and Martin Shires. And thanks to all you for listening and taking part. Have a great day.
Thanks, everyone.
Bye-bye.
Bye-bye.